Today is Big Money Bingo, where we're going to give away all kinds of prizes and learn how to trade in the process. So, our first video that we're going to watch today is called Ranking the Best Stop Loss That Doesn't Get Triggered. Now, that sounds great. I don't know who has ever gone through trading and been like, oh man, I wish I hadn't been stopped out. Apparently, there's all kinds of stop losses that never get you stopped out. If I had to guess, that would be the stop loss of I'm never going to sell. But what do I know? Let's watch this video here.
Do you know the best stop loss that doesn't easily get triggered? In my 8-9 years of trading journey, I have used many different stop loss methods, but only a few actually increased my win rate. So I decided to rank 9 stop loss methods in a tier list. The ones I'm going to put near the top of the list are the best, and those near the bottom are not that good. Number 9.
Okay. So as we go, this is Big Money Bingo Day, so people will be winning prizes, at least if you're here on the live stream and you've typed in the key phrase, the key winning phrase, #outlier. That's the only way you're going to win. You got to put #outlier in the chat. But if you see something on the bingo board, let me know. In fact, I believe stop loss, we've already said that a couple times. Let's go ahead and put that on here. Where's stop loss at? G1. There we go. First one on the board, G1. Let's go.
Many traders like to set the stop loss after a trend line or moving average. Like they take a long trade and set the stop loss below the trend line, or a moving average. They think that since these trend lines and moving averages act as support, the stop loss has a lower probability of getting hit. But the thing is, these trend...
You said trend lines. I'm giving trend lines. Follow the trend. I'll give you that one.
Trend lines and moving averages are not usually visible on higher time frames. If a
he did say moving average as well, by the way. I'll give you that one too. Joe, we're going to have a whole blackout today if it keeps going.
Support resistance is not visible to most people, not many are going to react to it. In other words, these trend lines and moving averages are weak support resistance. And therefore, the stop loss set after them is also weak. In my experience, the 200 period moving average acts as better support resistance than other moving averages. So, I many times like to set the stop loss on the other side of it if it's nearby. But overall, it's still weak compared to other things I'm going to rank in this video.
So let's pull up a chart here real quick. Let's go to a different stock. I've got the Qs all marked up for some secret projects that we're working on. So no show, no pants Joe doesn't even know about the secret project we're working on. Hang on. Let's go to SoFi real quick. So SoFi, what I wanted to show you is like moving averages, right? Price can be a very obscure thing. And what I mean by that is I remember when I first started trading, I was working with Steve Burns, author of many trading books, and he showed me a chart like this, and he'd be like, okay, Chris, which way is the stock trending? And I'll never forget, I was up there in an extra bedroom of our house having this conversation with Steve, and I was like, I don't know, man. And he's like, how do you not know? And I'm like, well, I mean, I can see it going up here, and I can see it going like sideways right here. I don't actually know if it's trending up or down. And he's like, that's easy. Chris, it's so easy. Just add 3 moving averages to your chart. Just add the 10 period EMA. That is your short-term trend. If price is moving in a big, beautiful trend, it will always be above the 10 EMA because that's just the math. Price is moving up harder and faster than the average price of the last 10 days. And then he said, add in the 20 period EMA. That's your intermediate term trend. If there's pullbacks, a lot of times it can pull back to the 20 and then come back up. And then add your 50 period EMA. That's your long-term moving average. And you can think of these in weeks as well. The 10 period is 2 weeks. The 20 period is 4 weeks. The 50 period is 10 weeks, right? So we're looking at the short-term, intermediate term, and long-term. And when your short-term, your 10 is over the 20 and price is over the 50, this is nothing new. If you've watched this channel at all, you've heard me say 10, 20, 50 for years at this point, because that is the outlier trend template. And I got it from my friend Steve Burns, who's been trading for, I don't know, 18,000 years at this point. And it always works, Joe. It always works. Every time there's a big, beautiful uptrend, the 10 is over the 20, price is over the 50. Every time, because it's math. That doesn't mean every time they cross, it will be a big, beautiful uptrend. But every big, beautiful uptrend starts with the 10 over 20, price over 50. Okay? And the same thing is true on the downside, right? When the 10 goes under the 20 and price goes under the 50, that is a bearish trend. Like I say, every time there's been a crash, the 10 went under the 20, price went under the 50. That doesn't mean it's going to crash every time that happens, but every time the crash does happen, the 10 goes under the 20, price goes under the 50. So it's understanding what a bearish trend looks like versus a bullish trend, right? And so by adding those 3 trends right here, we can see how it had a big, beautiful trend, a big stage 2 uptrend, a stage 3 sideways trend, and then a stage 4 downtrend. We can see all 4 or 3 out of the 4 right there, a stage 2, stage 3, stage 4 right there. That makes it so simple compared to just the price on its own. Let's see what that looks like again. Doesn't that make it a lot easier, Joe? At least it does for me. What do you think?
Yeah, significantly easier. And it sounds like if someone was to try to start building their own trading plan, one of the fundamental pieces they could look at is, am I over the 10 EMA? Am I looking at a cross? What has most recently happened in the past? Did I cross the 20? What's the 50 doing? And in the video, we heard mention of 200. So maybe they could even consider that in their own trading plan.
For sure. Now, I don't use the 200. I stopped using the 200 a while ago when Mark, our chief strategist, was like, listen, our signals actually work best under the 200. I know that sounds crazy. And then Scott, our quant, he proved that just the other day. Somebody was in the Discord talking about, everything works best once over the 200. And Scott was like, well, actually, hold my beer. We actually have the best signals when they happen under the 200 EMA or 200 moving average. There's a EMA exponential, which gives more weighting to the front end, more weighting to the current price. And then there's simple moving average, which is just every period has the same weight over those X number of periods. So let's go back over here real quick and keep watching this video. And as we go, please let me know if we are needing to add anything onto our bingo board here. It was me. It was Albertone. Yes, 2020 worked like crazy. And then, then things changed.
So, I will put the setting stop loss after the trend lines and moving averages in the B tier. Number 8. If you have been trading for a while,
Let's go ATR. Let's go ATR. That's one of my all-time #1 favorite indicators right there. I didn't even know this was coming.
have probably seen traders set their stop loss using the ATR indicator.
Joe, that's exactly what I'm doing. Exactly, precisely. In fact, in Plan M, we are now using a 2 ATR stop loss. Now, that's a decently sized stop loss. That's actually what this chart is down here. But when you trade a wide stop, you need to trade a smaller size. So we are adjusting our size to fit that. Okay, let's continue on with this. I'm excited to hear about ATRs.
Like, they will take a long trade and then add the ATR value to the entry price. And that will be their stop loss. Sometimes they will multiply the ATR value by 2 or 3 times to set a wider stop loss.
We just said that. We just said that.
However, if you have seen the Trading Rush videos, you probably know that I like to use the ATR indicator slightly differently. I like to add the ATR value to the existing stop loss to avoid getting hit by the market noise. For example, if I have a stop loss below a support resistance, but I fear it might get triggered because of the market noise when the price comes near the support, I will add the ATR indicator value to increase the distance. This works well enough, but I usually don't directly add the ATR value to the entry price itself to set the stop loss. The only time I have done this is during backtesting with code. In fact, we even have backtesting data on the Trading Rush channel that says adding an ATR stop loss directly to the entry price gets a much lower win rate. So I will put...
Interesting. We have the opposite data. So let's talk about what ATR is. Joe, we're going to drop off for a moment so everybody can see what that indicator looks like. All right. So this down here, in fact, I'm going to drop the chat off too. This down here is called the ATR indicator. And the ATR indicator is the average true range over X number of periods. I just use the default 14 periods. And so we'll look at SoFi right here as an example. The average trading range for SoFi back in September last year was 35 cents. You can see the candles, the movements were pretty small. By January, that was up to 90 cents. So it was nearly 3 times as high. Now, if the ATR is 3 times as high, that means the volatility is 3 times as high. Joe, would you want to trade a stock that's 3 times as volatile with the same size?
No, definitely not. That's way too much risk.
Way too much risk. Because it's 3 times as volatile, right? It's 3 times as likely to hit your stop, 3 times as likely to move faster than you had expected. And because of that, you need to be trading potentially 3 times as small. And then it even got even higher. 115 even gets higher. And around now it's trading around 134. So an entire dollar higher on the average true range on any given period. And so this is the same stock, the exact same stock that just a few months ago was down at 57 cents in June. Now in September, it's trading at $1.29, meaning it's more than double in volatility during this time. And because of that, you have to trade potentially half the size now as you were then. Oh, but Chris, if I do that, then I have less gains. Yeah, I know. I get it. That's the point, is this is way more volatile than it used to be, which means by trading half the size, you can have equivalent gains. Who would have thought, right? It's on purpose trying to reduce your risk. All right, let's continue on.
Directly using ATR stop loss in the D tier. Number 7, when I'm trading momentum, like
I have a D tier stop loss. Just saying, I have a D tier stop loss.
catching a strong short-term movement, especially in the stock market, I like to set the stop loss after the entry candle. Like, if I take a long trade, then the stop loss goes below the entry candle. When the price moves in the upward direction, I move the stop loss below the new closed candles. This is because I want to exit as soon as the strong upward momentum is lost. Outside,
Did he say entry signal? I see a lot of people saying G4. I'll give you G4. I'll give you G4. Manny's just on the hunt for winning a prize today. I get that. So is Jamie. What about O3? Did we hear O3 cut losses? I didn't hear O3. Joe, did you hear O3?
I don't think I did, but we'll see.
the short-term momentum setups, a stop loss below the candle usually sucks. But for momentum setups, it's a simple and useful trailing stop loss. So I will put it in the C tier.
Hang on. Actually, I want to go back. So what he's saying is a close below the previous low. So listen to this.
It's a simple and useful trailing
A trailing stop, a close below the previous low. I have used this for a long time. And our backtesting data, thanks to Scott, our quant, actually proved it's not the best route. It's really not. In fact, I can give you a great example on NVIDIA, where Joe and I were the only two men in the history of time who have ever lost money on NVIDIA, because we took a buy signal here. It closed below the prior low, and I got out. That was part of my trading plan. And then, as you can see, it continued on without us. And it sucks, right? I would not give that. I would give that F tier, because even though I used it, we have mathematically, empirically proven, and you can see right here on the chart a perfect example, that just because it closes below the prior day's low doesn't mean that it's going to reverse. But if you're keeping really, really tight stops, you're going to be missing out on a big move like this. So yeah, I don't love it, is what it is. G2, I hear a lot of chatter about G2. Which G2? Momentum? Fine. I'll give you momentum. These people, Joe, how dare they trying to win prizes today? Don't worry. I will make sure people win prizes today. Don't you stress on that.
stop loss. So I will put it in the C tier. If it were useful in more scenarios, I would have put it in higher tiers. Number 6, the VWAP indicator works as a good
VWAP indicator can jump off a bridge. I don't care for that one. What about you, Joe? You like the VWAP?
I used to use it. I've since pulled it off my radar, but if I went back into looking at futures, maybe I'd bring it back in. But yeah, I don't use it currently.
The skinny buff guy said, he literally said momentum 8 times in 30 seconds.
good support resistance in the stock market. Unlike moving averages, it's even visible at the same place on all other time frames. But it only works as support resistance when there is strong one-sided momentum going on. Otherwise,
Okay, he definitely said momentum that time.
the price ignores it and crosses it frequently. But in strong momentum setups, if the price is near the VWAP and I have taken a trade, I like to set the stop loss after it as well. I will put it in the B tier. Number 5, if you set the stop loss without considering any market structure, like you set it
Market cycle. I'll give you a market cycle on that one. I'll give you a market cycle.
at a random place, then it's a bad stop
Random guy, random stop loss. I like it. Makes sense.
loss. I will put it in the D tier. Number 4, speaking of setting stop loss without considering any market structure, I have used stop losses that work according to data, but are not based on any market structure. For example, the stop loss is set as a multiple of the entry price or a multiple of the profit distance. These kinds of stop losses are special and only work on specific setups. Basically, if the tested data says the stop loss works, then it's a good stop loss. I will put special setup stop loss.
That was a terrible description. I don't know, dude. My back tested proven exit points, which I have data for thanks to Scott, which actually that's part of one of the things that I'm going to do. So we're only with Scott for another like 2 weeks. That's it. Scott's gone back to uni.
Wow.
We are going to have all of the data available. Actually, let me rephrase that. We're going to have all of the conclusions from the data available. So there won't be any trust me, bros. Trust me, bro. This definitely works. Trust me, bro. I promise. Right. We're actually going to have all of that, all those conclusions where everybody can see it. And then if you really wanted to, you could go back and do all the back testing yourself. But that's one of the limitations that Mahesh put on us, is that you can give the outcomes, but we're not going to let people just have all of the buy and sell signals all at once, right? Because then they could probably do a lot of scraping and things that we aren't trying to get them to do. But we do want to give them the conclusions so that they can see it's not a trust me bro situation. It's data based. O1, what's O1? High probability setup. Fine. I saw 2 people said O1 back to back. I'll give you that one. Let's keep going.
Loss methods in the A tier. Number 3. One of my favorite places to set the stop loss is after the horizontal support resistance areas. I'm specifically talking about the horizontal support resistance areas where the price has reversed strongly from. If there was a big reversal, then that reversal point is most likely visible on the higher time frames as well.
So that could be like under an order block, right?
Yeah, exactly.
Like right here. You could put one, you could say, I'll put my stop loss right here under an order block. For sure. That would actually be a great spot. And Joe, we can actually have people who are watching this video, even if they're not customers of OVTLYR, if you use a free trading view plan and you look for a free indicator called Deep Thought, you can have your chart set up exactly the same as mine. How cool is that? You can have professional level charting tools on your fingertips for free. You don't even have to be a customer.
In other words, more people are likely to react to that support resistance. So, a stop loss after that horizontal support resistance area is a good stop loss. It will have a lower probability of getting hit. So, I will put it in the A tier. Number 2, I did a testing video on the Trading Rush channel a while back, where I tested different stop loss methods in a trend. In that test, a strategy with the pullback stop loss got the highest win rate. Like, after a long entry in an uptrend, setting the stop loss below the pullback is a good move. So, I will put the pullback stop loss in the A tier. Number 1, in my entire 8-9 years...
All right, everybody's freaking out saying 04. I'll give you 04. I'll also give you 03, because who said that? Hang on. Somebody said that's what this video should be called. Yeah, this video should be renamed to 04. I got you on that one. But I'll give you 03 anyway.
...of trading journey, one of the best places to set a stop loss I have found is where you combine the pullback stop loss with support resistance. Like, if I take a long trade and there is a horizontal support area nearby, I prefer setting the stop loss below both the pullback and the horizontal support area. If there is a 200 period moving average nearby, I will put the stop loss after it as well. If I don't want the market noise to trigger the stop loss when the price comes near it, I will add the ATR value to it as well.
So basically, he's just throwing all the kitchen sink at it, Joe. He's saying, the moving average, any kind of support zone, maybe an order block and an ATR. And he's like, listen, bro, we can't go wrong here. We got all this stuff working for us, right? It's got to work. It's got to work this time. And unfortunately, I think a lot of people can get suckered into that, because even when you've got the pullback, even when you've got the order block, even when you've got an ATR distance, you can still get hit by the stop, right? You can still have that happen. And of course, let's see, what can I throw on the chart, or what can I throw on the goal here is definitely to reduce risk at all times, right? And you have to follow your plan if you're going to make that happen. I mean, you can't do this unless you follow your plan, Joe.
This video kind of seems like a beginner's trading journey documented, right? Because at the beginning we saw, well, I got in, I'm maybe willing to lose 1%. Okay, I'll sell it at this particular price with no data behind it, right? So this person is kind of building a trading plan as they go, and then they're learning about ATRs, and then they're making stop losses based on ATRs, and then they're learning about EMAs and moving averages, then adding that to their trading plan. So it seems like a journey video to me.
That makes sense. And Joe, I struggled with this for a long time. I would say that was probably the hardest thing for me as a trader, which was accepting my stops, right? Just living with the fact that I got stopped out. Man, I can remember so many trades early on in my trading career, trading on an iPad under my desk, and I would see my stop got hit, and I'd be like, that's fine. I'll give it another day.
Yeah.
By the next day, it's $3 below that point. That's fine. I'll give it another 50 cents. The next time I check, it's $1.50 down. That's fine. It's fine. I mean, I didn't actually want to take that 50-cent extra. I'm going to give it another day. Surely it's going to turn around, right? And it just continues to go down. And it's in this ugly, awful downtrend. And you're so blinded by it's deer in a headlight type thing, right? It's like you're blinded because you don't want to admit you're wrong. B, you don't want to take the loss because there's always a chance it could come back. And this is one of the big core tenets in trading in the zone is it's like when you're losing money, you don't focus on the fact that you're losing. You're looking for the one green candle where you're like, come on, baby, come on. There's that green candle. I knew it was going to work out. And it's the one green candle, like 27 red, goes up for one day and then back down for more. Yeah. But you're right? It's a huge thing. And the only way, that's also from New Trader, Rich Trader, apparently. The only way that works is if you have the right mindset. The only way that works is if you have the right mindset, Joe. Because
your mindset can't be, well, it should come back.
That's the most dangerous word in finance.
It is.
That's right. Blinded by hopium. Yeah.
When you combine and set the stop loss after things that price can reverse from, the stop loss has a much lower probability of getting hit. When I see these kinds of scenarios, I know the setup will be a higher quality setup. So, I will put it in the S tier. Thanks for watching.
Okay, so basically the S tier is the combination of everything else you talked about. Okay, cool. I'm good for it. We didn't get any bingos on that one, Joe. We didn't get any bingos. Sorry, guys. No bingos today. Bye. No, I'm just joking. Second video coming right up. Your brain wants you to lose. But I want you to win. So be sure that you put #OVTLYR in the chat. Otherwise, you won't be able to win. It is an impossibility. You will not be able to win. But it is a possibility if you want to win by putting #OVTLYR in the chat. Let's watch this video. Your brain wants you to lose.
Let's set the scene here, right? You're waking up in the morning, your alarm goes off, you grab your phone, and before you even get out of bed, you're looking at what's taking place in the markets before you even poured your coffee.
All right. Type a 1 in the chat if you do this. Type a 2 in the chat if you're like, no, I don't do that. This guy totally does it. The first app I pull up on my phone, Joe. My new iPhone 17 Pro, right? My new iPhone 17 Pro. By the way, let me give a quick iPhone 17 Pro review. Hang on, let me take it out of the case. First off, the blue color, it's like purple. All right. It looks blue, but in real life, it's very purplish. Second off, if you have any iPhone from like iPhone 11 and greater, it's like 94% the same as this. So save your money. Okay, I'm just putting it out there. But the very first thing that I check every morning is the CNBC app, if you can believe that. And the one thing I'm looking for is the futures markets, right? I want to see, are there any big moves that happened overnight that I want to be aware of, right? Are there any things that went wrong or went right that I want to be aware of? Even if I'm sitting in cash, I'm just curious, like, has something gone sideways? Has something gone great? I don't know. What about you?
Well, interesting you bring up futures, because after I started trading that, I kind of saw before other people what the market was doing, because futures, as most of us may know, are traded all hours. I think there's a period like from Friday to Sunday, maybe it isn't, but so you get an indication of where people's mindset is on the trend of things like SPY, for instance, with ES and MES tickers. So yeah, futures definitely can give you some insight. Myself, though, if I'm in a trade, I keep a wish list of the stocks that I hold, and I check in that app. What are those doing? What's the pre-market? What's the post-market for the things that I'm actually holding? But first thing I do, though, coffee.
Oh yeah. Speaking of, I just refilled my cup over here. Dude, I don't like to look at pre-market prices for the stocks I'm trading. I think VKTX is a perfect example of that, because I remember specifically that morning it was up 10%. And I'm like, oh, well, that was cool. Awesome. And then by the time the market opened, it was down 40%. like legit actually like got totally dominatedly monkey hammered, which is why I will never trade healthcare again. Screw that sector, the entire sector. And you know, it doesn't really matter if you are an end of day trader what the pre-market is, and that's my opinion. Yours can be different, and you do you, my friend. But I just like to get a sense of what's going on in the market, right? Like if shit, you know, if China doesn't agree to what I told them, then I will crash the stock market, kind of situation. You know what I mean?
Mm-hmm.
All right, so let's watch this.
Coffee, you're starting to notice a lot of stocks that are just screaming up higher. Unfortunately, you don't obviously have any of those. And you also notice some of the stocks that are going down a lot, and those are the ones that you are holding, unfortunately. And then you start to see a bunch of stuff and news going off in social media. You look at your chats that you're a part of, and people are posting different setups and screenshots. And you come to the ultimate conclusion. And this question that's bubbling up in your head is, what do I got to do right now to make the most of money in the quickest amount of time? And
Ooh, that pressure. Yeah. So that's one of those things where that's a huge I'm glad he mentioned that. This is why I don't day trade. This is why I set no expectations on any trade that I take. Because realistically, Joe, if you feel like I need to make, we'll use round numbers, I need to make $10,000 this month to support my lifestyle, and you're at 7,500 or you're at 500 even, you're going to be taking trades based more in desperation than on a plan, because you're like, I got to hit this number. If I don't hit this number, I can't pay my mortgage. If I don't hit this number, I can't pay for groceries, right? It is a real thing. And so for a lot of people, I would tell them, you want to be a swing trader. Swing trader meaning you're not setting an expectation on the market. It will deliver you profits when there are profits to be delivered, right? And it may take weeks, it may take months before anything sets up. But when it does, you can watch your account skyrocket, right? I made no trades, Joe. You were there. This was the no trade show for months, from January to May. I made no trades whatsoever. From May 9th to May 14th, my account was up over 30% in 5 days. 5 calendar days, my account was up over 30%.
So how long do you wait? As long as it takes.
As long as it takes. But a lot of people can't do that. They want the action. They want the casino, right? They want to be able to say, I'm a trader, which means I got to be trading all the time. We understand that. And so part of our plan here at OVTLYR is involving plan Sit and Cash and Don't F Up, which is ESCO, which actually pays you daily interest. And then plan ETF, which I am working on an indicator today. I started on it this morning. Deep Thoughts give me a little help with it. So we will have an idea of when is a good opportunity to get into plan ETF. Even during the lifespan of the trade, you can trade in and out of it using this little indicator that I'm working on right now. It's not done yet, but that will be coming soon. So I think a lot of people want that excitement, but they don't understand the risk that they are adding to themselves by just craving that excitement. And we're fund managers. Thank you, Sol Invictus. I'm glad you put that out there, right? This is something that I want to really work on. Everybody who watches our channel is treating your account as if you are a fund manager. Do you really think Warren Buffett's going out there and he's like, oh my God, I gotta buy something today? Ray Dalio's going out there, oh my God, I gotta buy something today. No, of course not. They're waiting in cash until they see the opportunity that they need, right? They need to trade what they see. Look at that. I'm giving you guys all the help right here. They're waiting to see and have the confirmation. I know that's on here too. Have the confirmation that their plan is ready to go. And they're not doing it for the excitement. They're doing it because they know their edge. And their edge only works a certain percent of the time. Because their edge only works a certain percent of the time, they have to wait. They have to prepare. And then when it's there, they got to go in bigly. Where are they saying bingo? Did I miss a bingo here?
Mm-hmm.
Where?
Diagonally, 0 to 5.
Oh, that way. That way. I was looking for this way. Did somebody say bingo? Now I got to get all pumped up about it. Did somebody say bingo? Let's go! All right, we got our first bingo on the board. You're welcome. Let's keep going.
have a good trading session. And well, if that is you, you are basically putting yourself in a position to make the worst decisions when it comes to trading ever. Now, if this is you and you do it or been doing it for a long period of time, but you still have this feeling that you're right around the corner from big gains and consistent profitability, I'm here to tell
Did he say consistency? I feel like he did. I feel like he did.
you that you're not just around a corner that you're driving, you are driving in a circle, and it is an endless cycle if you don't break it. Now, these beliefs aren't coming from logic, they're coming from your brain working against you. And it's really time to start to understand what's going on internally to reframe and reapproach your way of trading. Our brains, they're not built to be successful traders. They're built for survival.
I agree with that completely. Now, let's talk about why. 90% of traders lose 90% of their accounts the first 90 days of trading. And that is what we would call normal. Joe, we aren't normal. What we do is not normal. The things we teach is not normal. To be a successful trader, you cannot be normal because normal blows up. I did it. Joe, did you blow up your account? I'm curious.
I have not, no. I was lucky, and I found some mentors like yourself who taught me about risk management and position sizing, and I'm working on the emotional side of the trade. Like one of the two things that you kind of teach are, follow your plan. If you don't know where you're going to get out, you shouldn't be getting in. But also to have money set aside to live on while you're trading, right? Not to depend on making those profits when you don't know if those profits are going to come yet. They could be a couple of months out.
You're right. And like Levi's saying here, we're not normal. We're outliers, right? And that's part of the name, of course. That makes total sense. But it's true. It's reality, right? What we teach here, what we do here, how we're going to win the U.S. Investing Championship in 2026 as a collective. I look at this, Joe, as if like I'm not going to win. We're all going to win together. It's going to be awesome. And we are not going to be blowing up our accounts. We are going to be following sound trading rules that are timeless and will continue to work over and over and over and over. And then we layer in the software, and then we layer in the trading psychology, and then you can't help but be successful. Mm-hmm. Joe, it's like the old cliche is it took Thomas Edison 10,000 times to create the light bulb. I think that was him, or whoever it was. But then he found 9,999 ways to not create a light bulb.
That's right.
Right. He has all these other ways that do not create light bulbs. They create all kinds of other things, but they don't create light bulbs. Okay. So if you want to do all kinds of other things, by all means do that. But if you want to be successful, you have to follow the principles that we do here on a daily basis. We're not going to leave you out in the cold. We're going to be as 100% transparent as possible. Very, very excited about this.
And the markets take advantage of that, greatly so. There's something called prospect theory that in 1979, two behavioral economists talked.
This actually, I don't think I'm giving away too much, but Mark Gariski, our chief strategist here, the one who came up with the outlier algorithms, this was a big part of it. Our ideas, the idea that investors place more weight on perceived losses than perceived gains. That's why we have that fear and greed scale, because at some point in time, people are going to get way more fearful, or they've gotten so fearful that the only thing they can do is turn around and start being greedy. This actually is a big component of outlier.
About this, and what it tells us is that the perceived risk, as far as investors go, the perceived risk of losing is 2 times more powerful than perceived gain. So we put more weight mentally on losses. And to understand,
and you can see it in our Discord too. If a trade doesn't go vertical, we get twice the amount of messages going on in Discord. I'm just saying.
Understand this from a perspective of a trader is critically important, because it'll help us understand why it is that we do what we do and why they say some 95% of traders fail. For example, imagine you taking a trade and the stock starts to go in your favor. Well, looking through prospect theory, if it starts going in your favor, you start to hold more weight on the potential of a loss. So as it goes further and further in your favor, mentally, we just don't want that to turn into a loss. So what happens is we typically try to take the trade off or redeem those profits before having to deal with the weight of a loss. Now,
Okay, that's great. So, there's a name for this, and if you know it, put it in the chat. But it's the example I've always heard is, let's imagine you're walking down the street and you see $1 on the sidewalk, and you grab that dollar and you turn around and you go home and you're like, oh, look at this, I found $1 on the sidewalk. But had you gone 100 steps further, you would have found $100 bill laying there on the sidewalk. It's the fear of losing even $1 because you don't have a plan. Gosh, I wish I could remember what that's called. It may be prospect theory, I don't know. But it's where people, they'll gladly take the $1 off and call it a winner and let their loser one run all over the place, but they cut their winner short because they're so scared, right? The loss aversion, I guess. Maybe that's what it's called. Yeah. That's a real thing. That's super real. I see a lot of people talking about G3. What is G3? G3, let winners run. Damn it. Fine, I'll give you that one. Dang. Oh, wait a minute. Does that get us another bingo, Joe? Let's go. Yeah, for sure. For sure. There's no loss aversion here. Only winners watch Outlier.
on the other side of that, if we take a trade and it starts to go against us right away, the emotional impact that gives us and the weight of realizing that loss outweighs critical thinking. And what we tend to do is either one, add to that and double down on it. And we get into a cycle where if it keeps going against us, we're all of a sudden saying, hey, if this trade were to come back to just break even at this point, I'll never put myself in this situation again.
Which, man, this is actually cool. Talking about the fear and greed. And let's talk about that real quick. And then also talking about the order blocks, right? So let's go to the SPY. Looking at the SPY's fear and greed, I think is going to be really interesting because we've seen, Joe, for a while, I think since July, the greed has been so elevated on this. The greed has been ultra elevated on this, right? And it just seems like it won't budge. But then again,
this is one of the factors that it's making it difficult to make money right now.
It is, yeah. Right? Whereas the way that Outlier works is that we want to see those turning points in fear. Like down here, you can see where the fear starts to abate and how it goes up so quickly. That is where we're after. But when the greed is just super high, it's hard to make money. And then let's go to AMD. And you can see just how quickly a stock that had grown in greed for so long can abate and turn into fear like no one's business. So AMD is really cool because we watched it go once the 10 was over the 20, price was over the 50. I think it was May 7th is when it flipped over. Hold on, let it load. Dude, it is storming so hard right now. Hold tight. Let it load. Let it cook, as my children would say. Let it cook. Come on. Good gravy, Joe. This is embarrassing. There we go. No, we still don't have the 10 EMA.
It's coming.
Finally. Goodness. All right. So when the 10 was over the 20, price was over the 50, it was May 5th. Rocket ships, right? And then, to his point he just talked about a minute ago, this is what an order block represents. Let's listen to what he said and let's look at it on the chart.
Break against us, we're all of a sudden saying, hey, if this trade were to come back to just break even at this point, I'll never put myself in this situation again.
This is the behavioral insight as to what order blocks are. People who bought it here Wednesday, July 17th, 2024 are screaming, if it only comes back to break even, I'll never put myself in this again. Tell me order blocks don't work. That's exactly the emotional drive that as to why order blocks work. It makes so much sense, right? Yeah, the screen reminded me of dial-up too. Good gravy. But this is why order blocks work. People are screaming to get out as fast as they can. And then back over on OVTLYR, right? You can see how it got greedier and greedier. Almost daily it got greedier. And then as soon as it comes up, right at this sell signal here on August 5th, greed has plummeted. Let's see where August 5th was. Right there. Coincidentally, or maybe on purpose, to the exact place where people were screaming to get out. And it has definitely gotten monkey hammered since then. Isn't this cool, Joe, to see it all work together, right?
It is very cool. You can see how the most important indicators just feed back the way humans operate, right? I gotta sell this thing before my spouse finds out, right? I've been holding it for 120 days. I gotta get rid of it.
Right. Everybody who's going to church, getting down on their knees saying, please, Lord, baby Jesus, let me get out of this at break even. Trust me, early on in my trading career, I did that. I will never forget the second time I blew up my account. Not the first time, Joe, but the second time I blew up my account doing exactly that.
Now, we could also layer on top of that some other cognitive biases as well, like overconfidence bias, where a few small wins all of a sudden gives us the feeling of invincibility in the markets, that we just cracked some sort of a code and we know exactly what we're doing. And this opens up the opportunity for risk to really take advantage of us. There's another one called...
Dude, we've seen that, right? Where it's like every time you get a winning streak, I should say, and you feel like I can't lose. I'll double, I'll triple my size, I'll quadruple my size because I'm not going to lose. In fact, I'm not even going to put a stop. Why would I put a stop loss, Joe? There's no sense of putting a stop loss if I'm not going to lose, right?
Oh yeah, right. Just hopium all the way to the top. It should go up.
Exactly. I see what y'all are trying to do on N4. I see it, and I'm not going to do it, but I might, but I'm not right now.
Myopic loss inversion. And what this is doing and telling us is that the more we focus in on every tick that the market moves, the more that every single move feels like life or death situation. And we end up making rash decisions we end up making rash decisions that are different from what our original plan actually was. So prospect theory, overconfidence bias, myopic loss inversion, these cognitive biases can keep us in a negative cycle if we're not aware of what they actually are. Now, here's where it gets very tricky. The very part of your brain that's designed to help you be successful at trading, the logic center of your brain, the prefrontal cortex, can get hijacked while risk increases. So if you think about it, if you're not trading, but yet you're spending your time thinking about how you're going to approach the markets, whether you're back testing, whether you're looking at new indicators, reading price action in a different way, planning your next day, planning the week, planning the month, whatever the case is, you're thinking very clearly about it. And
I'll give you N4 on that one, and let's discuss it, right? Having your trading plan in place, knowing what you're looking for, and then you can sit there. It's Joe, I don't go hunting. Do you hunt, Joe?
I do, yeah.
Yeah. I imagine that there's times where you're up in your deer blind or wherever you're at, and you're sitting there and you're waiting. Did you have your plan? You're waiting. You got your scope pulled up. You're looking right at it. You're just waiting for that perfect time. And then boom, taking it out, right? Is that what it's like? You tell me.
Yeah, and your heart's racing. You're so into it. Nothing else is going on, and you're just hoping just turn just at the right angle, and this will be a success.
Exactly. Your trading plan should be that way too. By the way, Joe's got to get out of here. Joe, hit the bricks, bro. Thanks so much for coming and crashing with us. This was great. Everybody say thanks, Joe, in the chat. Thanks, Joe. We'll see you later on this afternoon, my friend.
All right. Thanks, everybody.
The no-show Joe. See you, man. Get out of here. All right. Joe's gone. So by having that plan in place, you can sit and you can wait, and you're not sitting there with FOMO, right? You got to remove the FOMO. You have to take FOMO off the table. But a lot of people can't do that. They stress, they hope and pray. Oh, please, Lord, baby Jesus, let me get into this trade. But when you follow a plan, I think I have a book on my shelf. No, I don't. Okay. There's a plan or a book by Jocko Willenick called Discipline is Destiny, or Extreme Discipline. something like that. No. Discipline is Destiny is Ryan. What's his name? Ryan Holiday. I have that one too. I have an autograph version of that book. I have a nice little autograph book collection. Anyway, the point is that when you have the discipline, you don't have to stress because you know exactly what you're going to do to get in and get out. And that is how you treat your account like a fund manager. Extreme ownership. Thank you very much. I do have that one. Ugh. Get a hernia as I reach over here. There we go. Extreme ownership, right? So it's all about knowing exactly where you're going to get in and exactly where you're going to get out. And you've rehearsed this so many times, you don't stress about it. You know exactly what you're going to do. And so therefore it eliminates the stress of the trade in general. So if you are going to treat your account like a fund manager, you must set up your trades and you must know exactly what you're looking for and treat it as if you were a hunter.
Things make sense then when you're thinking about position sizing and strategies, etc. But once you actually are in the heat of trading, when stress levels can elevate, when risk increases, what happens to your planning and your strategy, or what you're prone to letting in, is the amygdala, the part of the brain, the fear center, starts to release chemicals. And these stress chemicals, Amy Arntzen, which was a neuroscientist out of Yale, discovered that these chemicals can hijack your prefrontal cortex. And this idea was popularized by another neuroscientist named Daniel. I don't remember his last name. And it was called the amygdala hijack, where it's, in theory, hijacking your ability to think logically about a situations, and you start reacting more emotionally. That's why when you know the plan of trading and you know your setups and you know what you're looking for, sometimes even when you do that, all of a sudden things can turn against you very quickly. You wait, you prepared, and as soon as money enters in and it starts going against you, you start thinking differently. Your brain and chemistry is completely changing. And that's because you're not quite in control anymore. If you're not aware of this, you are being hijacked. And the bigger, deeper truth that I want you to take away from all of this is that your brain wants you to lose because it's evolved to avoid pain, to chase comfort, and react to stress, which is the exact opposite of what professional traders and successful traders do. So
I will give you N4 and I'll give you another bingo in the process. So let's all celebrate. Bingo, baby. We're at a triple bingo so far. We got one here, we got one here, and we got one here. Very good. Triple bingo so far. So I don't know if your brain wants you to lose. In fact, one of my all-time #1 favorite trading books. Somebody was asking about what trading book they should start with. Let me move some spooky season decorations around real quick. I would go for this one. If you want technicals and such, I would go with this book, Trend Following. Now, there's been multiple versions of this one. I have this one and I have this one. Hang on. Over here, right? Same book. One of them is twice as big as the other. This one is a very difficult read. This one, the 2012 version, if you can get it, is amazing. This is the best $10 I ever spent my entire life. Hands down, full stop. Best $10 I ever spent ever. On the recommendation of Steve Burns. So in this book, Ed Sakota is one of the market wizards, and one of his quotes in that book, as well as in the Market Wizards book, is that everybody gets what they want out of the market. If you want action, you're going to find it. If you want to make money, you can find it. If you want sympathy, because then you can go lose money and then tell all your friends, oh man, I lost so much money, you can find it. Everybody gets what they want out of the market. I don't want action. I want to treat the market like an ATM. But that's just me. But it's one of those deep down core beliefs. Whatever you want to find, even if you can't consciously say, I want to make money, what will happen is you will do the actions that cause you to make money, that cause you to lose money, that cause you to overtrade, that cause you to look for things to do when there's nothing to do. It's absolutely a very, very, this is the hardest game in the entire world, right? And if you want to be successful, You can't be like everyone else, because trust me, you and I both know this. Anybody that you've talked to about trading stocks has no idea what they're talking about. There are only a handful of people, the top 5%, the top 1% of people who actually have been in the markets for more than a couple years, who have not figured out the market, but figured out how to work with the market, like who you're watching right here, right? I've only made 2,400 videos. I've only been on YouTube since 2017. Okay. This is what you're looking for. You want to work with people and learn from people who don't talk a game. They show the game inside out, upside down, backwards, and they know exactly what they're talking about because they've been through the entire experience and they want to help you. And that's where that's where I come in.
There is an allure to big wins, right? You want big, fast, quick wins, and you can share it on social media, be excited about it. And here's the problem is these big wins that we chase, they're not just creating volatility in our portfolios, they're creating volatility in our emotions. And many of the times people will say that after a big win, I'm going to take it seriously. At this point, I'm not going to do that again. I'm going to take it seriously. But there is research on the subject. There's something in 1990 written called the house money effect. And this tells us actually there's a higher probability that we actually will end up taking more risk at some point because of what we priorly did or a big.
That's funny. One of the idioms about being in the market is, hey, you want to become a millionaire trading stocks? Start as a billionaire. Because you have so much money, you have so much house money, you have so much money in place that you forget about risk. You're like, oh, that's fine. I can lose on this one. I say, if you want to be successful, you need to start with a smaller account because each one of those trades hurts or each one of those trades builds confidence. But if you start with a big bankroll and then you just casually trade, it's a completely different ball game.
Big win because we tend to feel like it's the house's profits. Now, there's been neuroscience that actually back this up as well. And this cycle of bigger win, bigger risk, painful loss, and then chase once again, it doesn't just drain your account. It does wire your brain in.
No, I have not heard 5 bingos. Not happening. But I was trying to click on Eric before Manny popped in there. That's exactly how he blew up his account. He got really lucky and thought he was a genius and took on way too much risk. Eric, my friend, you're normal. You're normal. So I don't want you to feel bad about that. That was a learning experience. And what you experienced is a normal thing. But now you're here. You're an outlier. You're abnormal.
And it creates not only a roller coaster of emotions, but what you'll tend to notice is more volatility in your P&L curve. You'll see big swings up, followed by big swings down, big swings up, followed by big swings down. And it's not until you start to break those habits and stop chasing the one and done sort of mentality, you'll start to notice slower movements of consistency and process and how it outweighs and there's less risk and you get a much smoother P&L curve like the one that I'm sharing right here. The traders that are going to last and thrive are the ones that are able to break this negative feedback loop that our brains put us in. And they do this by building a process and having a discipline to stay within that process. Paul Tudor Jones has preached the same thing for decades. You got to focus on the things you can control. And what he says here is focus on protecting capital, not chasing returns. Now, there's 4 things that we have complete control of in these markets. It's what are we buying, when are we buying it, and how much of it, and then when we sell it. If we get good at focusing in on the things that we can control, chances are we build process around that and discipline, you're going to be a much more successful trader and avoid any of those negative cognitive biases that can really pull you back into a negative feedback loop. Process, discipline, consistency, these things compound over time.
We already got all those. And
if you keep on repeating it, it's going to, with discipline, it's going to outpace anybody who gambles and tries to double down on losing or is trying to take out those big wins, chasing these big wins, big gains, and trying to speed up this process without actually having a process. It's exciting, but unfortunately, the real cost of that is blowing accounts, anxiety, anxiousness, and years of lost progress. So the truth of all of this is people want a shortcut, and the shortcut is simple. There is no shortcut. It requires you to build on process, discipline, time, consistency, and focusing in on the things that you can control. I'll end with this to maybe keep in your head, and that is that fast money will fade and process will compound. Hope today's video helped out. See you later.
So, Correctional Officer Hart said, I just deleted all other trading platforms like StockWits and all those penny stock trading apps. They were killing my profits, and I'm only trading with OVTLYR from here on out, following my plan. That's what I'm talking about. That's what I'm talking about. So, we have how many bingos? We have 1, 2, 3 bingos. I know you guys wanted this one to hit 5, but we didn't get there. We didn't get there. So we got a triple bingo on the board today. So let's see. Should you buy a new Rolex or wait? All right. Let's go to the giveaway tool. Do me a favor, if you have not, or even if you have, and you just want to make sure that you're entered, put hashtag OVTLYR in the chat. You can't win unless you put hashtag OVTLYR in the chat. So even if you aren't 100% sure, you should definitely type in hashtag OVTLYR in the chat. Like Michael, like Dr. J, like Salty Brad, like Steve, like Andre, like Sean, like Sergey, like Don. You got to make sure you put hashtag OVTLYR in the chat, but you got to spell it right. Breathe, that won't count. The sharks with laser beams, that won't count, my friend. You got to type it correctly. Like Rasmus has done right here. Like Pat Greeny, he's done this right here, right? Like Steven, who we kicked off the show looking at his super fun memes. I really appreciate that, Steven. Okay, so hashtag OVTLYR in the chat. So we are going to give away 3 prizes on this Monday's Big Money Bingo. Let's see. Who's going to be the first winner? Who is going to be our first winner? First winner of the day will be Julian Hall. Congratulations, Julian. Let's see what Julian's won. Let me take a screenshot and start sending this to April. By the way, for all of our winners, in order to claim your prize, you need to shoot an email over to support@ovtlyr.com, and April will get you that right away. By the way, we are legit. We do keep our word. And if any previous winners want to share their experiences of getting their free stuff, let us know in the chat. That would be cool. Let's see what kind of cool stuff Julian can win. Let's go to the Wheel of Fortune. Let's see. No cap. I learned some new phrases. Julian got a grand prize monkey hammer hoodie. Congratulations. The hoodies are most expensive items. So congratulations to you, Julian, with a monkey hammer hoodie. Hang on. My email is acting up. Julian, congratulations with a monkey hammer hoodie. Outstanding. So congratulations to Julian winning a grand prize. Let's see who the next winner is. Draw again. Steve says, I won the free stuff, and he has his stuff. Awesome. Julian, you are so welcome. Let's see who the next winner is. Next winner of the day is Redvav85 or 8054. So that is our next winner of the day. Redvav. Redave. Let's see how many different ways Chris can say this wrong. Redave, 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 Redav, Redave, Redave. Either way, I think it's funny to say things wrong. I know you guys think I'm stupid. Well, let's go. Congratulations, Reardiarv. Monkey Hammer koozie. It's a Monkey Hammer kind of day. Carol Catherine had a Monkey Hammer hat, and it just arrived today. Outstanding. All right, so the Ridiav, the Rivian Dave gets the Monkey Hammer koozie. Monkey Hammer koozie for Monkey hammer koozie for Mr. R.E. Dave. All right, congratulations to you. Who is our final winner of the day? Final winner of the day. I am not going to go out and touch some grass. It is storming so hard out there right now. Not going to happen. Congratulations, winners. Let's see. It is our final winner is out of Austin. Out of Austin. Very cool. I also am out of Austin. I do not care for Austin. Austin is one of my least favorite places in Texas. I know I'm crazy, but nothing is worse than Houston. Nothing is worse than Houston. Okay, let's go. Let's go out of Austin. Let's go. All right. Out of Austin got an Outlier flag hat. Hey, that's a sick hat. I'm just gonna put that out there. An Outlier flag hat. Let's go out of Austin. James lives in Pflugerville. Dude, my very favorite place in the entire world is Fredericksburg, Texas. Outlier flag hat for out of Austin, which is a little bit outside of Austin. So Fredericksburg, Texas is so cool. You know what it's next to? Lukenbach, Texas. Let's all go to Lukenbach, Texas with Willie and Waylon and the boys. Outstanding. So congratulations to Julian Hall, who got the Monkey Hammer hoodie, to R.E. Devav 8054, got a Monkey Hammer koozie, and congratulations to Out of Austin for winning a Outlier flag hat. It's a beautiful hat. It is an outstanding hat. Don't forget, for all of our winners and everybody else, shoot us an email over at support@outlier.com. And thank you so much for coming. It has been a fantastic day. We watched 2 great videos. Hopefully, it'll help you along your trading journey. So listen, I'm sure at this point, you're probably looking to save money or save time, make money, and start winning with less risk and not blowing up your call to action on YouTube. So you should definitely click one of these 2 videos. Have a fantastic day. I will see you all in the invitation-only live stream this afternoon. Talk soon.